Bismillahirrahmanirrahim. Assalamu alaikum dear students. In this video we will discuss the accounting equation. What is accounting equation? The left hand side of the accounting equation is resources supplied by the owner is equal to resources in the business, means total resources in the business. In accounting, special terms are used to describe many things, like the amount of the resources supplied by the owner is called capital. It means the investment of the resources supplied by the owner is called capital. This investment in the shape of cash, it can be bank balance, it can be goods, it can be other assets like furniture, fixtures, and etc. And the actual resources that are then in the business are called assets. And the investment of the business by the owner will be equal to the actual resources that are then in the business will be equal. It means the actual resources will be called assets, and the resources supplied by the owner is called capital, and capital will be equal to the assets. Usually, however, people other than the owner have supplied some of the assets. These people are outsiders other than the owners. And what will we say these assets? Liabilities. We will call these assets. These are the liabilities. What are the liabilities? Liabilities is the name given to the amounts owing to these people for these assets. The amounts which will be given by the outsiders is called liabilities. And what are the liabilities? Liabilities are the obligations of the business which are payable at specific date. These are the obligations, responsibilities of the business. Debts of the business. The accounting equation has no change to capital is equal to assets less liabilities. It can be also assets is equal to capital plus liabilities. And resources, what they are? Assets. And resources, who supplied them? Capital plus liabilities, means capital will be supplied by the owners, liabilities will be supplied by the outsiders. These are the obligations, and capital will be the original investments, and these two are equal to the total assets that are used in the business. And then chart of accounts. What is chart of accounts? There are 5 chart of accounts that are used in the accounting. First is assets, and second is liabilities, and third will be revenue, and fourth expenses, and 5 capital. The 5 chart of accounts are used in whole accounting. And there are assets have many kinds, and liabilities have many kinds. Revenue is the sales revenue and like services revenue, and expenses, indirect expenses, direct expenses, and other many types of expenses. And capital have many types. And we will use these 5 chart of accounts. These are the main heads of the chart of accounts. And we can further divide these chart of accounts, but in whole accounting these 5 chart of accounts will be used. And what are the assets? Assets are the resources that are owned by a business, mean the ownership of the business, like cash, bank accounts receivable, prepayments, building, land, plant and machinery. The assets has two types. First is current assets. Assets consisting of cash, cash at bank, inventory, goods for resale, accounts receivable, prepayments, or items having a short life. It means current assets that have a short life is called current assets, and second one is non-current assets that are also called fixed assets. Assets which have a long life, bought with the intention to use them in the business and not with the intention to simply resell them. Non-current assets, yeah, or fixed assets are for the long time. Uh, these will be these assets will be bought with the intention to use, not for resale, like land, building, plant and machinery, premises, vehicle, furniture, fixtures and fittings, etc. And liabilities are the obligation of the business that will be paid near future, or expenses incurred not yet paid. Means liabilities are the obligation of the business. It can be payable in the future, or expenses that are incurred but not yet paid, like accounts payable, expenses owing or accrued. These are the accrued expenses, but incurred but not yet paid. We can say it owing or accrued expenses. Short-term loans, long-term loans. Liabilities has two types. First, current liabilities to be paid for within a year of statement of financial position date. Accounts payable, owing or accrued expenses, short-term loans. These are all called the current liabilities. And non-current liabilities, the liabilities which have to be paid more than a year from the date on the statement of financial position, e.g. long-term loans. So short-term will be current liabilities and long-term will be non-current liabilities, which will be payable within a year, that is called current liabilities, and which will be payable after 1 year, that is non-current liabilities. And what is revenue? The financial value of goods and services sold to the customers, like sale of goods, sales of services. Means the which amount will be charged against the goods will be the revenue, and charge what will be the charge against services is called revenue. The service charge against services will be called services revenue, and sale of goods will be called sales revenue. And what is expenses? The value of all assets that have been used up to the obtained revenue. We can divide it into two types. First will be direct expenses, that is also called the cost. The expenses which are paid before sales, e.g. purchase of goods. And the second one is indirect expenses, the expenses which are paid for generating revenue or sales. Means these expenses will be charged after the gross profit, and direct expenses cost will be charged before gross profit. And what is capital? The total of resources which are invested in a business by its owner is called capital. Equity, another name of the capital of the owner. Capital is often called the owner's equity or net worth. It comprises the fund invested in the business by the owner plus any profit retained for use in the business less any share of profits paid out of the business to the owners. Means uh, capital is the investment by the owner in the business plus any profit will be earned during the year, that is added in the capital, and deducted drawings, that will be taken by the owner from the business.